I'm Iain Craig, BDO's Eye on Tax, and I'm here to toast the success of the new government on their election and to outline for you the tax changes we can expect to be introduced by this government. With the new government being Labour-led, there's a sense of continuity in tax. It's kind of a business as usual, but with a twist. I am of course referring to the increase in the top marginal tax rate to 39% on personal income over $180,000. This will increase the gap between the company tax rate at 28% and the trustee rate at 33%, and that will bring some implications. We expect this rate to be introduced from 1 April 2021. So for those of you who own your own business, we suggest you contact your advisor and undertake the following action points. Firstly, I think you should review your business ownership structure and consider if it is still fit for purpose. For example, if you own the shares in your company individually, should they be transferred to a family trust? Secondly, should you consider paying out a fully imputed dividend prior to the change in tax rate? And thirdly, you should review how you remunerate your senior people and see if there's an opportunity for some tax efficiencies in the way in which they are rewarded. Of course, we have been here before. We have had a top tax rate of 39%, and when that was introduced, there was a change in behaviour by taxpayers which the Inland Revenue, how shall I say it, considered to be of an avoidance nature. Whether this was trading through a trust or suppressing the personal services income to below market value, any change that you undertake now will need to be carefully navigated through the precedents that were set then and the legislation that has followed. So a couple of tips to think about. If you pay a dividend before April 2021, remember the company must be able to satisfy the solvency test, and you have to take into account the impact of COVID on your business for that purpose. But also there will be a resident withholding tax cost of 5% to top up to the top marginal rate of 33%. Secondly, if you are considering transferring the shares in your company from individual ownership to a trust, remember that this will create a change in continuity for shareholder continuity, which will have an impact on the carry forward of imputation credits and potentially an impact on the carry forward of losses. And this is a nice segue into one other change in the tax system that we expect from the Labour government, and that is the introduction of a rule for the carry forward of tax losses where a company can meet the same business test. This rule was announced as part of the COVID-19 relief measures, which included reintroduction of building depreciation, low value asset write-off threshold being increased to $5,000, a carryback of tax losses to allow a refund from tax paid in a prior year. All of those ones have been enacted, but we haven't seen the final legislation in relation to the carry forward of the tax losses. While it is expected to be based on the Australian legislation, we are hopeful that New Zealand will Kiwify those rules to enable Kiwi businesses to adapt to the current business environment without breaching their same business test. Finally, I think we need to recognise the potential influence of coalition talks. While we expect the government to be Labour-led after the result on Saturday, they may be in coalition talks with the Green Party, who have signalled the introduction of a wealth tax as being one of their main driving policies. We don't know if that will survive the coalition talks at this stage, so please watch this space. Lastly, I said I would toast the government, and I just wish them that they make good decisions in managing our economy. Stay safe everybody, be resilient and support each other. Good health.